Hi and welcome back to Robin School of Traders. In this video, we'll try to touch base all the power of Bollinger Band. It has 21 famous rules. Now, if I elaborate all the 21 famous rules, the video will be elongated and it will take minimum 2 hours and more. So I've tried to give a crisp structure to it. I'm sure you'll enjoy it. So let's get started. So first, say what is a Bollinger Band? It was developed by John Bollinger Band and it measures the volatility of the market. And let us spend few seconds, few minutes in getting to understand the formula. Guys, is very simple. You simply take a simple moving average of 20. You can change the this also as per your appetite, but the formula is based on this only. Just build on this is a line called simple moving average of 20. And what Mr. Joel Moninger did, he said, I will take a standard deviation from here. So I took a standard deviation from here, and the standard deviation was 2. So by default in any software you will find a standard deviation of 2. So a price, it takes a standard deviation of 2. So you get a simple band, and a band, this is called upper Bollinger Band. And from here you simply deduct the standard deviation 2, you get a lower Bollinger Band. Guys, the formula is very simple. Let's go to an Excel. So this is the price, closing price of an instrument, and this is a simple moving average. It has taken the standard deviation of this. Sorry, it has standard deviation of this. Now, if you take a standard deviation of this, you get this, and you simply add, you get an upper band, and you simply deduct this with this, you get a lower band. So we get a 2 band. This is the upper band. In example, this is this 91.2, and this is a lower band. The example is 86.1, and in between the line is simple moving average, which is 88.17. And the difference is the difference of upper Bollinger Band and lower Bollinger Band is what we call bandwidth, and it will play a vital role in our various routes. So this is the formula. Formula is very simple. So once we understand formula, now let's try to understand what are the USPs of this band. We'll try to understand what are the patterns, M pattern, U pattern, not V pattern. These patterns can be arrested very beautifully in this chart. Walking the bands, parallel band, squeeze and pinch, which is the USP of this band. Superheated, I think this again is one of the good USPs of this. Superheated stocks, overbought oversold, so it gives an edge. You can really try to buy at the highs, at the lows, and sell at highs. And this is something new. We'll try to forecast the instrument by using the standard deviation 3 and 4 and try to gauge in within next quarter how the price can instrument, we can find out the price of the instrument. We try to find the correlation with the Keltner channel and try to correlation of find the Donchian channel. So this will take, I will take a next episode. So this is the how we'll take it started. So we know what is a W pattern. If a stock is from uptrend is coming to downtrend, it will take some sort of support and make some sort of pattern. So this is what we call a W pattern, which I've learned in our typical technical classes. This you can see wonderfully in our charts. Let's get started. So if this is for this, you have to. This is a Nifty last day class. It is 5 minutes chart, and over here you can find a simple W. The price was coming from higher end. It was made some sort. It rested in the lower band, and it made a W pattern. And see what a move. So from here to here, this was the minimum move was there. So if you had the knowledge or if you had the information that the price is going to move, so you can increase the number of lot size and make out money. Same with M top. Same with M top. So price has come down from here, lovely pattern. So the rule number 2 says if the price goes against the band and somewhere it makes a closing inside the band, and if it doesn't moves up the band, it will touch minimum the middle. So we understood what is a W pattern, how can be used. Same we can use a inverted M top, and similarly we can use a V-shaped recovery. This candle which it formed went away outside a Bollinger Band standard deviation 2. Had the closing have been gone down, so we would say the brand the this is the walking in the brand. So it came inside the lower band, touched it, and again the closing was inside and moved out. So this is a very good example of V-shaped recovery. So when we have some small knowledge, And this V-shape recovery is an inverted V-shape recovery if you are able to catch. And these are, by the way, if you put this in candle, this will be a wick. These are basically a wick of the candles. So you can make good money by this small knowledge. Now let us see what is a walking on the brand. This happens almost every day, or 3 out of 5 days in Nifty, Bank Nifty. Somewhere between 11:15 to 12:30, 12ish, the Nifty goes to sideways. So over this is a typical example. The bands are parallel. That means the volatility of the market is very low. And over here, all the people say not to trade. So I say to trade, because if you know your stop losses and your targets, and over here the stop losses are very small. So if you increase the number of lot size, then, and the profit will also be a bit low, but the risk is very low. So over here you can put money, make money. Next over here, though this is not a typical example, there was a gap down. So if you see the bands are coming down, both the bands, if you see over here, both the bands are coming down. That means the market itself is coming down. So this is a typical example. Your simple moving average is coming down and both the bands coming down. That means that market is going to come down. That doesn't say the market you will get a gap down, but yes, the market is on downtrend. So next day we got a gap down. If you see, the candle was outside the Bollinger Band and it came down, and it was somewhere with the Bollinger Band and retraced. So this is a typical example of pinch. This now take example of Zomato. By the way, Zomato, this was our last call. This call had given it almost return of 20% in a single day. So over here, the price was stagnant. There was nothing volatility in the market, and the result came. And as I shared in the video, you can check in my Facebook. The stock reported a profit of 253 crore, vice with the last year of 2 crore. So that is a case study, and if there's a huge pumping in FI and DIs. So this is a typical example of pinch. What is a pinch? The price either will be stagnant and there will be blast. This is a number one kind of pinch. And typical pinch is this: the price, your upper band will come down, the lower band will also go up. That means the price will oscillate in a narrow range. The price will somewhere oscillate in a narrow range, and it may blast in either side. So this is, in this case, the blast for this side, but this is, so Bollinger Band never says the blast will be which side, but the USP of this indicator, if there is a blast, you guys, the stop loss is very small. So over here the stop loss, I work this and use this. You can easily have win ratio of 1:10 and more than that, and it works very good if there is a news in the market in quarterly result kind of thing. It works, shoots up, and works pretty well in Nifty, Bank Nifty, or somewhere. So arguments, if the Nifty is somewhere or Bank Nifty is somewhere sitting in a high OI, or call writer, call puts when this move out. So this is the time you get a strong pinch and you make double. You're not double, you can make 8 to 10 times of the money, more than that. Now, one more USP of this band is you can forecast the price. Yes, guys, you can forecast the price. So Bollinger, when he developed this instrument, he said with a standard deviation 2, I can have 80-85% price falling within the band. Now simply plot standard deviation 3 and standard deviation 4 and standard deviation 5 on daily or weekly chart. You can gauge within the next 6 months where your instrument highs and lows. So with this, one of this method, you can find in next 6 months where your instrument is going to hit if the instrument is uptrend, for argument's sake. So this gives an idea. And while we see our television, experts say the Nifty is going to touch to 25,000 after the level is 25,200. So from here also, you can easily find out the Nifty, the future of Nifty in weekly, daily, monthly time frame. This is a typical example. Now, if you do the same thing with a Keltner channel, so there is a correlation between the huge correlation between the Bollinger Band, Keltner channel, and Donchian channels. This is an example of Keltner channel. All the formula studies are different. I just want to show you the difference between this and this is a Donchian channel. So guys, I'm sure you must have liked this video. So I've tried to give a clips of 21 laws which was there in Bollinger Band in a span of less than 10 minutes. So if you like the video, do subscribe to my channel. Thank you.